I'm getting internet rugged. Internet rugged. Ladies and gentlemen of the interwebs, we are live. This is the Beacon Roundtable. Hope everyone's doing well. My video might actually be frozen, but hopefully you can hear me. I know there's going to be a little bit of, chat lag and whatnot.
Yeah, Chris is getting rugged by his internet, and the rest of us are good, though.
Andrew believes that we should all be on the same internet.
Well, I said that we should all have fiber in a particular city.
There is fiber coming to my city from Google Fiber. They've been here for a year and a half. So hopefully, in the next couple of months.
They came to my city like 5 years ago. Still don't have it. So I hope they like your neighborhood more than they like mine.
I have the option between Starlink or like 2 megabit per second copper lines that were laid down in the 40s, 50s.
Probably go with the copper lines.
I could probably,
those are my two options.
Yeah, I could probably beam to you. What about you,
Jingle?
What
I hear Starlink's getting pretty good, pretty fast. But yeah, sometimes you will drop some packets just if you don't have those sweet satellites overhead.
Personal experience has been getting worse, but that might just be my location. Yeah, it was great when it started. No drops, no nothing, and it's been steadily going down since then.
Maybe it's because like more people are using it now. Like it's growing faster than they're launching new satellites or increasing their bandwidth. I don't know. For me, I am spending most of my days traveling between undisclosed location to undisclosed location. So the internet infrastructure in undisclosed location is of undisclosed quality.
You can get a Starlink package now that you can take with you sailing across the Atlantic, where you want to go. You can bring it.
Yeah. That's an idea.
I want to see Jangle get a sailboat. I'm there for it.
Honestly, like, could you imagine aping Ponzi farms like in the middle of the ocean on a sailboat with Starlink and solar panels?
No taxes in international waters.
It's like on the stormy seas of DeFi, on the stormy seas of the earth.
You are literally Beacon.
Yeah. That'd be cool.
I mean, I was just gonna say you should just get like a Sprinter van, or
it's like double the adrenaline.
Yeah,
Sprinter van would be cool. I did go through a phase where I was, very interested in those van life builds.
We all do.
Yeah, I mean,
I still am.
Funnily enough, I talked to my therapist about that a long time ago, and I said, "Why am I?" It's like the duality of Jangle, right? Like on one hand, I'm working myself to the bone to try to like make lots of money in these like really insane financial markets. And then on the other hand, I'm dreaming of being a homeless vagabond who lives in a van down by the river. Like, what's going on in my brain here? Like, can I get a diagnosis? And she said, like, I don't know, like, you're fine, just chill. She said to find some balance. So maybe that's what this is. Maybe that's why we started a podcast.
Just chill. That's good life advice.
I don't know. I don't believe in balance.
Yeah.
You believe in chaos?
I've got a question. No, not chaos.
Maybe seasons of being an insane crypto degen, and then seasons of living in a van down by the river.
Well, I think it's clear. Like, I mean, I'm not a psychiatrist or a psychologist or any sort of ologist, but it's clear that what you were, both things are freedom.
Yeah,
both things are a form of freedom, and one of them is being like financially free forever, and the other one is being like free from mowing a lawn. I've never really been interested in mowing a lawn. Anyway, we're getting pretty off topic for a cold open, but
I kind of like mowing the lawn.
The advantage to a van compared to a boat is at least your house can't sink.
Yeah, no. With
Definitely
the exception
can.
of, I mean, it could. Yeah, it's probably actually more easily sinkable when you think about it.
But you can move it. Is I guess you can avoid the
Yeah.
water.
Yeah. Yep. Quicksand is also a concern you have to be aware of when you're on the land. But yeah, no, I think that's actually a really good insight that they're both just different extreme forms of freedom. Self-custodying your own assets and multiplying your wealth in absolutely ludicrous crypto bull markets, and then living in a van traveling around the country. Yeah.
Telling you guys where we're going, we won't need roads, as they say in Back to the Future. And on that, let's move into the one thing we're leading off with today, and that's setting up for the bull market. Interestingly enough, crypto inflows are up, making 2023 over 1 billion on inflows, which is the third largest on record. Led by BTC, ETH, and Solana. Interesting article here. Just seeing that even with probably was more in 2021, but still the fact with all of these ups and downs, mostly bear building, to see that we've got $1 billion in inflows is a really, really strong sign. Any initial thoughts on that?
What's the time frame on the billion in inflows? Into
this year to date, I think.
Year to date.
I'm not sure I understand. So there's been $1 billion there's been way more than $1 billion of inflows year to date. Like the crypto market cap went from sub-trillion to like,
I think it's net. 1. I think it's net inflows.
Well, the total crypto market cap is like 1.4 trillion at the beginning of this year. 1.45 at the beginning of this year, it was like 0.8.
Well, to me, it just shows the sign that people are coming back to crypto. They're coming in droves, which means that there's going to be hopefully a lot more action. Obviously, we've called the start of the structural bull market. So that kind of leads off to where, a lot of the movement that's coming on. We're seeing huge movement in terms of, bulls defending supports. We're seeing protocols being launched. People that possibly might have launched sooner are now launching now. There's a lot of frenzy. We have incentives. We have a lot of people farming in a bunch of different protocols. Services being used. I've been seeing on crypto Twitter, there are record volume days for multiple dexes. There seems to be a large pickup in business, which is a good thing, right? How about, did we lose Jangle? We lost to Jangle.
Uh-oh. I think it's objectively good for my bags.
It's objectively good for our bags, right? We've regained to Jangle.
Yeah, I mean, there definitely have been inflows. I don't know how you're quantifying the billion. If it's into a particular asset over a particular time frame, I think there's been way more than $1 billion of inflows year to date in the market.
I want to jump in and say here the total crypto market cap is also dependent on the pricing of the token. So when you get $1 billion in inflow, the total market cap goes up by more than $1 billion.
Yes,
the price of the asset's worth more, right? Yeah.
Yeah, I think like maybe the most useful metric. Token or DeFi Llama has a USD inflows in net inflows broken out by day. Maybe the total market cap of stable coins would be probably a decent proxy. Because then you're not dealing with the market cap fluctuations that can be caused when, things with a lower circulating supply or lower liquidity are bid, causing the price to move up, causing the FDV to do, multiples with just a small amount of capital buy pressure. Like that's the sort of thing that occurs. So since what is today? It's the middle of November. Over the last 30 days, so October 15th, according to DeFi Llama, the total market cap of stablecoins was 123 billion, and today it is 126 billion. So in roughly 30 days, there have been about $3 billion increase in the total amount of stablecoins in circulation in about a month. So that is, that's bullish, but it's not like insane, right? It's not the, when you look at the lows, so, January 1 of this year, we're looking at a total stablecoin market cap of 137 billion, which is, slightly higher than where we are today. So what does that tell me? That tells me that there have yet to have been major net inflows of new money into the space. Most likely your neighbors are not talking to you about crypto, right? Most likely your Uber drivers, your bartenders are not telling you about how they're getting rich off NFTs. We are not at that stage of the market cycle. What's the stage of the market cycle we're at? We're at a stage in the market cycle where people who are in crypto, who are sitting on the sidelines, are taking their chips and placing their bets on the table. And so I think that's why we've seen a lot of things run up, and we've seen things run up kind of inversely proportional to their performance during the bear, right? Things like Solana, things like Avalanche, things like Link, things like Thorchain, right? These are a lot of the major performers over the last month. While the majors like BTC and ETH, they've done well over the last month relative to the dollar, but they've been drastically, underperforming things like Solana. But then you look at the bear market and you say, well, ETH and Bitcoin performed the best, during the bear market. They were down the least bad, or something like Solana, something like Link, something like Thorchain, Avalanche, they're all down big against their BTC pairs. They're all down big against their ETH pairs if you're looking at the totality of, the previous bear market and accumulation phase. So that tells me that likely, a lot of people who were allocated to BTC, they're likely hodlers, right? There's less paper hands in BTC, less fear in BTC during the bear market, and a larger market cap. And so therefore, when you have a risk on period, people putting their chips back onto risk in the crypto market, yes, people are buying some Bitcoin, but the major movers are going to be the things that were beaten up the hardest, but survived the bear market. So that's kind of how I'm looking at this period of market cycle is, we have yet to see the retail FOMO, but we definitely have a bullish posture from the crypto natives, from the money that's predominantly already here, which is why we see year to date prices up, but net market cap of stable coins flat to slightly down. I think that'll change when you start seeing major capital inflows into the space. BTC and ETH will have already run from a price perspective, and then we'll certainly be in the second half of the bull market. But yeah, right now I think we're in a position where we're crypto natives and people who are already sort of in the industry are getting their positions ready for the bull market. That's the way I see it.
Yeah,
just as a clarification, sorry, Gabe, just clarification, my fault. I should have reread the headlines. Crypto fund inflows. So it's Bitcoin ETPs and stuff like that, exchange traded products. So that's where the 1 billion is coming from. It's the third largest on record.
So I know there's a Solana trust sort of thing. There's a Link one as well that are trading really at high premium to their net asset value. I know Fidelity has some sort of ETH product as well. They're not necessarily spot ETFs, so I don't think they are. I think they're futures products perhaps, but yeah, those are probably the things that are experiencing the inflows. Makes sense.
Go ahead, Gabe. Sorry about that. Gabe, did we lose you? We might have lost Gabe.
Wow, we're having some internet problems today, boys.
Seems that way. What's going on? There
Internet's
must be.
been weird this week.
You know what it is? It just might be this Celestia absolutely exploding. Kidding. I haven't bought TIA. If anybody has bought TIA, I'm not really buying anything spot right now, but congrats to anybody who has bought TIA. Obviously,
I think it was an
talked
airdrop.
about the.
Right?
It was, and it was an airdrop that U.S. residents could not get, even with a VPN. VPNs were not a thing, so you actually had to physically find a way to find a way to be in a different country that didn't involve a VPN in order to claim that airdrop. It was only open until the 30th of October, the day before Halloween, and then the claims were closed. So at that point, all of this has just kind of been bullish market sentiment. Overall, Celestia as a product, really cool, really great idea. Obviously, we'll see where it goes. Is it overbought? Who knows?
Yeah, I know a lot of people in our mastermind were farming that airdrop on our Saturday airdrop farming call. So definitely know a lot of people who got that, and it's kind of time intensive farming these airdrops. Trying to figure out how to automate it the best we can, but when it pays, it pays. So that's just the nature of the game.
Agreed. Obviously, unfortunately, I'm having some technical difficulties. One thing we wanted to look at specifically, and Jangle, if you want to talk to this, was specifically the performance of Solana. FTX has been dumping their Sol weekly, yet Sol is continuing to surge, which is a very interesting trend. There seems to be a lot of more people buying because I think they can only sell once per week. So ultimately, this action is being picked up as like a dip slurping event of some sort. And I have an article here from Van Eck that shows that they believe that there's even more juice in Solana, particularly with some of the new things. If anybody watches Bankless, you got to see Ryan's take with, was it Ryan? Well, either one of their takes. They went to Solana Breakpoint and saw some of the great stuff that was going on there, specifically with how they're going to be working with FireDancer and some of these other new technologies that they have going on to help with throughput and block space management. So there's a lot of building going on there. Something that honestly I was not anticipating. Did anybody else see this coming? I'm sure, Jangle, you have with your network buzzing about Solana.
Yeah, I mean, I own not a lot of Solana. I honestly round tripped it pretty hard during the last bull market. So I'm just holding predominantly that bag. But I do hold some, so yeah, that's a disclosure. I am not a huge fan of the token, even though I think the network and the builders there are, super gigabrained, and there's a lot of nerd sniping going on in the Solana ecosystem, right? There's a lot of people who are, really talented engineers and developers who are working in the Solana ecosystem, and it survived a catastrophic event for the network in the collapse of FTX and a lot of brand damage around that. And it's clearly making it out the other side with a really strong core community. So do not want to fade Solana, the network. And by that extension, who knows what the asset is going to do. The sky is the limit, I think, for the asset. It doesn't necessarily fit my investment thesis because I don't view Solana as having very strong direct value accrual or Sol doesn't have value accrual from the network in a major way. And yeah, I just don't consider it a very strong form of money, right? Could that change in the future? Yeah, I mean, certainly ETH didn't have a lot of the properties that make it a very strong money in 2019 or 2018. Like that could change for Solana, and like I certainly would not go out shorting Solana. I have no intention of doing that. But I also believe that, you know, you got to identify your personal edge, have your conviction, and like that's where I hold the majority of my crypto assets, and like things where I have conviction, I can hold through volatility, etc. Like if I was to buy a large position of Solana today and it crashed 75%, like I wouldn't feel good about it, right? I probably wouldn't be excited to buy more, right? But if I were to allocate to like ETH or Bitcoin and then it were to crash 75%, like I would feel fine about it and I would keep buying more. So like that's a personal question for everybody. Like what assets are you willing to hold as your like core positions? And what assets are you like trading with if you're a trader? And, you know, I definitely think that Solana has the potential and like maybe even the probability to get higher multiples than something like ETH, right? Just because of the difference in market cap size and you know how beaten up Solana has been during the bear market relative to its ETH pair and relative to its Bitcoin pair. But yeah, I'm just like a strong believer in like in crypto, you got to kind of treat it like surfing. You can't chase waves. Like you're just going to tire yourself out and like get wrecked. You have to like position for waves and then catch them. So like I've got my theses that like I'm a strong believer in different sectors in the crypto world. And so I'm like allocated to those. And yeah, like I'm cool with other things pumping that I don't have as large of allocations to, and like likely will. So like another like Doge will probably have its time in the sun. Pepe will probably have its time in the sun, and like I'll miss those pumps as well because that's not my edge, right? Trading meme coins is not my edge. So like it's cool. I think like especially when bull markets come around, you've got to recognize what your edge is, and you've got to operate in the markets based on that edge because you're not going to be an expert in every single sector. You're not going to be an expert in every single blockchain ecosystem. So if you're like very affected by things that aren't your bags pumping, you're going to have a really tough time in the bull market because there's going to be a lot of crazy things going on that make absolutely no sense. Like, you know, literally pictures like JPEGs of rocks being sold for multi-million dollars, right? Like that was happening. I wasn't buying JPEGs of rocks because it didn't fit my investment thesis. And like, that's okay, right? There are people who are meme wizards who, you know, made lots of money off JPEGs of rocks. And like, that's their edge. Like these rocks are going to explode. I know it. This is the supreme of gravel, right? Like that is their edge. They know it. They play that. Good for them. So just like know your edge, stick to it. Don't chase the pump, but always respect the pump.
What a Zoomer reference. The supreme of rocks. Of gravel. He's like, these are the supreme of gravel.
Yeah.
Oh goodness. Yeah. No, I completely agree. I think that's something that we talk about a lot in the mastermind is, you know, understanding what your wheelhouse is, having a plan, sticking to it. Yes, there are going to be things that are going to kind of, you know, work their way in, but be cognizant of that and stick to the plan. When you derivate from the plan, that's the quickest way to just hit failure. Couple things, and again, I apologize for. I've been trying to look at my network here to figure out what's going on. Cointelegraph article: history tells us we're in for a strong bull market with a hard landing. Inflation's up. Consumer debt is at a record high. Things that we've talked about, you know, with some of our big picture posts. It's possible that, you know, I guess the median house. I just saw this earlier this morning. Is over $100,000, and the median income in the U.S. is like $75K for a family. So it's getting harder and harder to. There's more debt piling up. You know, the debt forgiveness cycle has just kind of restarted, rather ended. So it's just going to be a lot of down bad for a lot of people. So I guess my question is, hard landings with regards to some of these bull markets that may happen. Kind of a weird
No, I think the U.S. economy is as strong as ever. I mean, right? Unemployment's down. 75K. If that's really the median household salary, like, isn't that up? I don't know if it's
It is.
necessarily keeping track with inflation. I do think that, over the last few decades, there's strong data to suggest that, like, the overall affordability of living an American life, food, housing, transportation, et cetera, maybe haven't been necessarily keeping up with inflation. So wages and, like, the true cost of living, when you consider that CPI is kind of like a scam metric, like, yeah, I think there's trouble. But, like, looking at just the last few years and, like, where we're at in this business cycle, it's like the market is pricing in. This is not like a non-consensus view, right? Like, I'm spouting what the market consensus is right now. I'm not claiming to have any specialized knowledge, but, like, the consensus view seems to be that soft landing, like, or no landing, right? The economy is as strong as ever. CPI inflation, even though it's a scam number, is, like, coming down in a pretty meaningful way. So, like, we can expect, like, maybe another rate hike, maybe two, but, like, the probability is that there won't be any more rate hikes, and the market is pricing in no rate hikes, or even, like, federal funds rate reductions in, like, 2024. Not like back to zero, but, like, like a 25 bips, like 1 or 2 bips reductions in 2024. I think that's the consensus view right now. And, like, markets are getting incredibly risk on compared to where they were a year ago. And, the consensus is, like, the bull market's, like, we're so back. So I hope you were packing your bags for the last year, because we certainly have been.
Additional
Yeah,
thoughts,
I
Gabe,
can
Andrew?
jump in a little bit on there. Yeah. So I agree with Django, especially recent data has been very positive, like job data, CPI, inflation data. Most of the data over the last 3, 4, maybe even 5, 6 months has been pretty positive, and does seem to indicate some kind of soft landing or no landing, like Django said. I think looking at or trying to look at a bigger picture, historically, most of the pain in the markets that we've seen has been as rates start going down, right? So it's not maybe not that intuitive, but usually they only lower the rates because they have to, because there's too much pain in the market. And I don't think we've hit that threshold yet. They're trying to keep the rates high as long as possible. And once they start lowering them, usually that's when real pain and at least TradFi markets come in.
Well, usually you're right. Usually the catalyst for more loose monetary policy is to bail out the economy, because the economy and unemployment are looking a little bearish, and we want more GDP growth. So we increase the availability of credit and decrease the cost of credit. But that's not going to be why they lower rates this time around, right? Like, GDP growth there's still real positive GDP growth, even at these higher rates. Inflation is coming down, like, the economy is strong, right? This is what we've been saying forever, like, between different productivity increases in the economy, from, technology to manufacturing innovation to AI to, bioengineering and robotics and, crypto technologies. Like, we're going to add tons of efficiency into the economy. So, like, the real GDP growth is probably going to be positive, because, like, I'm just bullish AF on humanity, right? So, like, why are they going to lower rates? Like, they're going to lower rates because to bail out the government, right? To bail out the fiscal situation, not to bail out the real economy. So that's kind of like my high level thoughts. I'm not a macroeconomist, but that just seems like the writing on the wall to me.
No, that's a great point.
I mean, they certainly have to. They certainly do have to lower the cost for US to borrow more money. Yeah. That's definitely not sustainable. Whether they do that as a public thing and keep it on the current system and lower the rates for everyone, or they do some kind of special thing for the government only, remains to be seen. But yeah,
that would be crazy. I guess, like, I'm not a lawyer. I guess they could do that. Like, the central bank could make, like, some special deal where, like, government debt is issued at a lower rate, but, like, everything, but then that would destroy the bid for government debt. Like if I can lend to Amazon and get, 9% or something, I don't know what a 10-year note to Amazon pays.
Sorry, just want to clarify. This would be like a last ditch effort, and it would not be. It would be when there's already no bidders for US debt, and then at that point it would be the Federal Reserve doing it.
Yeah, that seems like a really unlikely event, to be honest, because then it would destroy the bid for debt, right? And for US debt, it would only be essentially the central bank that would be buying the debt, which would obviously be extremely hyperinflationary. So, like, from a monetary policy perspective, like, I don't think that makes sense. Like, I think the much more likely scenario is like rates are just lowered, right? And it just reduces the cost to like a negative real yield on government bonds, which enables lots more borrowing, and like increases GDP growth because the government's spending lots of money and that's getting pumped into the private sector, which is increasing tax revenues, which is increasing GDP, causing like slightly higher rates of inflation that the economy can just like withstand for a longer period of time, that debases the currency and therefore debases the debt burden. Like that's the playbook. And then like crypto and real assets are the escape valve for wealth. So if you want to like maintain your wealth and grow your purchasing power, like you buy real estate, you buy crypto, you buy productive businesses. And like if you hold dollars, you just like get boned. Yeah. What's up, Andrew?
Yeah, if I could just jump in real quick before Andrew here, if you don't mind. Yeah. Yeah, but if you do rapidly lower the rates, even if it is to bail out the government and allow them to borrow cheaper, that also decreases the perceived value of that debt. So that also reduces the amount of people and amount of institutions, amount of countries that want to actually lend to the US government, especially considering their debt to GDP ratio is over 130% already.
Yes, but as they're doing that, like the act of doing that will cause equities and crypto and real estate and everything to go right, to like explode in price. And so then like it makes getting a good deal on risk assets or real assets that are not, government US shit coins, like a lot worse and harder, right? So there's like a gravity knob on financial markets that the Federal Reserve controls. Like as rates go up, like they're like turning up gravity on financial markets. Like it drags financial markets down because the opportunity cost is higher because you can just go lend to the government or lend to a AAA corporation, and like, get a good rate. When that goes down, the calculus, like the equation stays the same. It's just the price of risk assets adjust based on that. So like there's always, assuming an efficient market, right? There's always like a balance in the price of like the S&P 500 versus like the federal funds rate. So like that gets adjusted. And then if you're lowering the federal funds rate, it reduces the borrowing cost for the government. It also reduces borrowing costs for corporations. So like, it's not like you have an alternative. Well, I could lend to the government for 0.1%, or I could lend to Amazon for 9%, right? Like if that were the case, then, there would be like mass, there would be like no demand. There'd be a mass destruction of like the demand for government bonds. I don't think that's going to happen. I think like the federal funds rate, if it goes down, will go down for the government and it will ripple through the entire economy. But again, like they don't have to do that anytime soon, right? They have unlimited spending until 2025, and they could in 2025 just determine that they have unlimited spending until 2027 or 2028. So like there's no necessarily like rush to do this. It's just like we're getting to the point where the kicking of the can is getting like really grotesque. Sorry, Andrew, I know you had some stuff to say.
Yeah, go ahead, Andrew.
No, this is all great. I'm happy to wait. So I feel like you guys have been having a great discussion around like a base case for the economy, a base case for fiscal policy. And there's a lot there because it's so complex. It's so complex without anything else. What's been interesting to me about US government debt being equal to annual defense spending or very close to it.
Interest expense.
Interest expense. And all of these things that are like there's less dry powder in the system to deal with a problem. I don't think we're going to have like just a calm another 10 years where nothing happens. I think we're going to have additional shocks, at least similar to the last 5 to 10 years. So based on that thesis that I have, I'm kind of looking at this and I'm trying to think, okay, well, how is this system going to deal with this particular stress? This particular stress. How is the system going to deal with nuclear tests starting again? Now that all of the nuclear, or excuse me, Russia and America have exited the or not even ratified the last nuclear test ban treaty. So we're going to see nuclear tests again. That seems inevitable. What if we saw a nuclear weapon detonated in Eastern Europe? How's that going to affect the economy? How's that going to affect financial policy? What about a Chinese invasion of Taiwan? So war, I feel, is coming. Great power conflict is coming. And
Boomers
under an
everywhere.
environment where great power conflict is coming, that can really change a lot with the economic calculus. In a lot of ways, it might even be more bullish on the American economy. Because, I mean, depending on how you count it, look at World War II, best economy we ever had in this country. So there's a lot of other potential, like, weird black swans that could impact the environment other than just great power conflict. But that's one of the things that I just continue to think about is how is that going to happen? How is that going to impact things over the next 10 years?
Yeah, so I'm not Nassim Taleb. I don't base my entire portfolio off of like low probability long tail events. There are investors that do that, and that's cool. That's their edge. That's their strategy. My like outlook doesn't necessarily even heavily affect my portfolio strategy, right? Like you have enough dollars or fiat, whatever your fiat is, to pay your bills, right? And like maximize your sleep adjusted returns. And you keep that with like low interest rate exposure and like short duration T-bills, right? Or that's what I do, right? And then you have strong real assets that like generate income and that will go up in the case of debasement or inflation. And then like you wait. Right. So that's it. If there is a geopolitical strife, then like, guess what? Like risk assets, they could go up, they could go down, depending on the nature of the event. But I think like war causes currency debasement. Currency debasement means I don't want to be sitting 100% in the currency. Right. And so, yeah, I mean, I'm not really concerned about any of these like long tail events. They could happen. They probably won't. If they do, like, doesn't change my portfolio allocation strategy one bit.
Well, one response, I'm not saying I'm concerned. I'm trying to figure out how to benefit from it because I think it's going to happen. And that's my thesis.
Yeah,
so
like
maybe
there's
I
a lot
am
of
that long tail person that's just, I'm trying to think about that.
there are a lot of people who are like, on my Twitter timeline who are very bullish, like oil and uranium and stuff like that. That's not my sector. But cool. I mean, maybe
Uranium
maybe
is an interesting narrative, not from the nuclear weapon perspective, but I think more from the energy perspective.
Yeah, that's what I'm saying.
And making us less reliant on oil. Yeah. I mean,
but like, I'm just so not interested in talking about energy stocks.
No, I get it. And I mean, yeah, crypto is not a US asset. So it's even if there was a global conflict, crypto assets not directly tied to the dollar wouldn't necessarily be affected by that.
Yeah, and that's what's really another cool thing about crypto and international stocks and stuff is that like we could be going through a tightening phase of the business cycle in the United States, and like China could be going through a period of quantitative easing, and like, or maybe Southeast Asia or Russia or India or wherever, and like capital from other jurisdictions could find its way into Bitcoin or find its way into ETH, even when the United States or certain countries are going through a tightening phase. So it is like it's international exposure, which is very interesting, I think, for me as an American investor.
So one interesting thing that is a thing apparently is it looks like Michael Burry has closed his short position against the market sometime in the last couple months, and apparently he's done so at a 40% loss.
So did Sifu.
Yeah.
Huh?
Oh yeah. Well, everyone thought that Sifu was gonna get liquidated. I don't know if he actually did get liquidated.
Oh, he did.
Oh, did.
Or
Okay,
he
good.
closed the position at a massive loss, one of the two. But yes, he did. Sifu down bad. Yeah, bears are fucked. I don't know what else to say. Don't be bearish, dummy.
Dummy.
How are you going to be bearish on like when I don't know what he was shorting specifically, but like imagine being short ETH when the market's down like 80%, and or even worse after a massive liquidation and like tightening cycle, and now the market's recovered 100% off the lows and is showing insane signs of strength. So you have regulatory tailwinds, you have financial products being offered to the most liquid capital markets in the world to gain access and capital inflows into these assets, and you're short. Like, are you crazy? This is the most obvious trade setup I've ever seen in my entire life, being long major strong crypto assets over the next few years. Is like, I don't know how else to say it. I don't know how many times a week I have to say it. Yes, bullish.
Not financial advice.
Yeah, not financial advice. This is for me and not for you.
You're an excellent entertainer, Jangle.
Thank you. Yeah, I mean, Michael Burry, like I said it 1,000 times, like pessimists get to be right. Like, congratulations, Michael Burry. Everybody thinks you're smart, but optimists get to be rich.
Ooh. I like that. Well, speaking about optimism, obviously, since we're in the early parts of this bull market.
Great transition.
I just wanted to know, just obviously setting up for the euphoria, timeline wise. Obviously, we're not trying to time the market, but to get people who are listening to us for the first time, what should they be doing to, get set up for what could possibly be the greatest explosion of our lifetimes?
They
Feel free to
should
take
ask
any thoughts
their
here.
financial advisor, and they should not be basing any investment decisions off of what they hear in this show.
Mm-hmm.
Can you rephrase the question maybe in a way that I can answer?
What are you doing over the next couple of years?
Yes. What are you doing over the next couple of months?
Accumulating coin and ETH, probably. I mean, Coinbase and ETH are my kind of like core positions for the bull market, I'd say. But that's might be boring for a lot of people because that's what I've been doing over the last year and a half.
Gabe, what about you?
Can we talk about Coinbase's customer support experience?
Sure.
You want to use it as a platform against that? Sure.
I don't want to talk crap. I just something that I have noticed based on personal experience recently is that Coinbase doesn't really seem to care about having business customers. So it seems like they are just very retail focused. And I would think that a publicly traded company would be able to outperform some private smaller entities in that particular arena. And it's been disappointing to see. It's been disappointing to see because I'm bullish Coinbase too. But the fact that you need to wait weeks to get a response on a support ticket, and you can't get phone support for business accounts is really weird to me. It honestly looks like they actually don't want business customers.
I've had bad experience personally as well with their customer supports in the past. It is probably something that they need to work on improving. Maybe they just have too many customers. Maybe that's the problem. But I'm sure
maybe they have too many customers.
If that's the case.
Maybe that's the case. Do you think they have too many customers on base?
No, I think they don't have enough customers on base to pump my bags.
I agree. I don't know if this is going to work, but we're going to try. Coinbase has launched KYC on base. This is part of their Coinbase.
I don't know if that's what that
verification.
headline says, does it? I mean, it says they launch a KYC service on base.
Service, yes. That's what I meant. Service. It's called verifications. KYC service based on top of EAS, which is Ethereum Attestation Services, that is available for protocols to build into their calls.
So basically, it's a KYC service that posts some data or maybe some metadata on chain. And so you can create a DeFi app that is like KYC compliant. Is that what I'm understanding?
Yes, or to provide some sort of decentralized identity process. It's meant to rival Clarus's proof of humanity protocol. I'm assuming they're going to be using it to help protect protocols against Sybil attacks and just giving a standard for authenticity of personhood or humanity, as Andrew
Makes
would be.
total sense. Yeah, makes total sense. This is just a primitive that allows anybody who builds on base to permissionlessly integrate a KYC service into their application. It doesn't look like it'll be mandatory. I don't know if they have the ability to enforce that anyway. Like you can still permissionlessly
That would be my worry.
You can still permissionlessly launch smart contracts on base. So like it doesn't make sense to me that it would require you to utilize this KYC service, but it's rather a primitive that they are launching to rival things like WorldCoin and have their the native ability to build KYC into applications as an option on their roll up, which makes total sense. It creates use cases that maybe otherwise couldn't exist on chain at all.
One group who does want to know who you are is the IRS. Yesterday, or held a hearing on this new 1099 DA. That is their new digital asset reporting form, to a huge firestorm of comments, which is the main reason why they had the hearing. Basically, to hear people talk about how that what they're trying to do is antithetical to the ethos and spirit of decentralized finance overall. Any FUDs you have of the IRS, Jingle?
Yeah, I'm a subscriber to Coinbase's Stand with Crypto sort of email service. So I was able to click a link from them and create an AI generated comment to post on this.
Do you know what that comment was?
I don't know. It was several paragraphs. They have to read every single one. So, yep. It was fudding it. For sure.
It's a good service. I like that.
Yeah, it is. I highly suggest here. I'll link it. Stand with Crypto, especially for U.S. citizens. Standwithcrypto.org. Standwithcrypto.org. I'll put it in our internal chat here. Basically, if you give them your email, you will get emails every time there is legislation that you can comment on. They will give you, it literally took me maybe a minute and a few clicks to generate, a 3, 4, 5 paragraph response with AI based on my sentiment towards the bill. They just were like, how do you feel about it? Click a few buttons and it generates a message. you can post that to, the IRS or the IRS, the SEC, the CFTC, whichever agency is trying to, because it's usually not, Congress writing these bills, right? It's agencies that are passing some sort of regulation, some unelected bureaucrats that are required to open up their legislation for a comment period. A lot of times, if there's over a certain amount of comments, the ruling or the regulation automatically gets delayed. So it's really important if you're into that sort of like civic responsibility thing. They also grade different representatives in different jurisdictions based on their support or opposition to crypto. So you can see people in your jurisdiction, and if you're a single issue voter or you just care about this issue going into the next election cycle, you can see Coinbase's score for each of these representatives.
Put that in the chat, sir, please.
I did here.
You put in our chat.
Yeah, I thought, there you go. I put it in standwithcrypto.org.
Yeah, and they had this kind of grassroots stuff at Denver. They had a whole bunch of flyers and stickers to give out for such a thing. For those who are not aware, they are going to make they've turned crypto into digital assets is the new term. That way, everything, including NFTs, are going to be included. I believe there's also verbiage to require crypto service providers to turn over records of client transactions to the IRS. That's not new. But what is new is tax loss harvesting is only up to $3,000 per year. That is something that most likely will happen. So
there's already a $3,000 maximum on what you can write against your income for your tax loss, your capital gains loss. So you're saying, like, let's say you have, $20,000 worth of losses for that year. Normally $3,000 count against your income to reduce your income tax. And so you carry over $17,000 to the next year's capital gain or loss. Are you saying that this IRS bill is saying you could not carry over capital losses?
I will have to. I don't want to be quoted on that, so let me look into that, and I'll get back to you on that. Either way, they're looking to find ways to make that more fair, I guess is the word I would use.
So what I had seen was that the IRS bill would or the IRS proposed, I don't know if this was going through Congress or if it was something just posted by the IRS, that they would want exchanges to then report the activity not only of their customers on the exchange, but of all of their wallets, and come up with P&L and stuff for all of their wallet addresses. And I don't know how that's going to shake out. Extremely impractical, logistically not very feasible.
Yeah, the word's been overreach is really what the comments have said. So if this is something that you believe very strongly in, which I hope that all of you do, definitely help fight the good fight to make sure that a correct and fair framework is put together.
So they would require all centralized exchanges to do the taxes for every wallet address that interacted with the exchange. That's absolutely crazy.
Yeah, and of their how it's written is of their exchange customers. So like it's not clear how they would necessarily determine, because like I can withdraw from an exchange to an address that I don't own, right? Like, and I'm pretty sure I have done that several times, right? Like I send me too, from my centralized exchange. Like if I have some USDC sitting on there, some ETH, and I want to pay somebody, like I send them from my Coinbase to their wallet, or from my Coinbase to their deposit address on their Binance, right? Like that can happen. So it's like,
and what if you use an intermediary address and just send it somewhere else? Are they going to track that as well?
Like cold storage.
That would be like every wallet you ever interacted with for any reason.
Yeah, and then I don't know how this would work from listening to Coinbase's quarterly call. It seemed like their stance was something that like it could even require LPs on decentralized exchanges to have reporting obligations for everybody who's like, let's say, use the Uniswap ETH USDC pool if you were providing liquidity in that pool, which is obviously impossible. So like if you deposit a Uniswap LP, like could you be then on the hook to create tax documentation for like tens of millions of people? Like, I don't know. So I think that it just doesn't make a lot of sense the way it's written. And I think it's got a lot of comments. Go to standwithcrypto.org, add your comment in, make sure it doesn't get through without a whole lot of fuss. And I'm sure that, the IRS can stick it where the sun doesn't shine, I suppose.
Woohoo. Real quick, we'll move into our last topic. So one thing I wanted that just came up in my research, if anybody has used SafeSwap, they have just released integration into Optimism, which is the reason why I found this in particular. I personally haven't used it, but the one thing that's interesting about SafeSwap, and it's something that we talked 15 months ago as a term, is the concept of an atomic swap cross-chain. So
this is still the tax news on screen, by the way.
Is it? Connections. Never mind. Because I have changed the window. But specifically they're allowing it's let me put the link to the website here. It's safeswap.io. But they are providing through hash time lock contracts a smart contract way to go cross-chain with atomic swaps, meaning native assets, no wrapped, which is huge, actually, if this is something that they've actually pulled off, because this is something that's kind of like been the holy grail of being able to send peer-to-peer, it's essentially, assets or just swap assets in such a manner. So they are the group that is, I believe it's well audited. And it's called Safe Haven is the name of the company. Their swap is Safe Swap. Their token is SHA, S-H-A. And interesting idea. I personally haven't used it. I'm going to look into it this week to check out, how it works, and in terms of fees, if it works well. The reason I bring this up is because the next thing we're going to talk about is wallets. Because we've been talking about the narrative about how I believe wallets are going to be part of the way that the next billion will come into on-chain finance. And the reason for that today is this past week, Binance joining Telegram, joining Uniswap, putting out a Web3 wallet, which allows you to do cross-chain swaps. I'm guessing they're using Layer 0 tech for that because of their PancakeSwap affiliation, along with just general swaps and accessing multiple apps within the ecosystem, much like the Uniswap app does. So they're really just from getting down to the layers of DeFi and on-chain finance and bringing it out to the app level. Now, because it is in the app, I'm assuming the Binance.com app, this is probably not available to U.S. customers.
I'm not familiar with this project or their token or so no comment.
That's fine. Well, how about Binance doing a wallet? Binance doing the Web3 wallet. What do you think about that, Gabe, as a non-US person?
I like the idea of new wallets being created. I think there should be more competition. We've started seeing some pop up now. But simplifying away complexity in the crypto space through the wallet apps that keep being developed and have good competition, I think that's a good way forward. And I agree with you. That's likely what's going to help, will be the strongest contributor to onboarding more people into crypto.
Yeah, I agree. Another one. Does anyone here use BitGet? If you use BitGet, put a 1 in the chat. They are self-reporting that they're the world's largest CEX now. I don't know if that's foreshadowing with Binance, but I don't think they're bigger than Coinbase, but maybe by active users, maybe they could be. They have also launched a Web3 wallet, and they've actually have a partnership with Chili's. to give everyone their fill of blockchain-based baby back ribs. I'm totally kidding. It's actually for Chiliz, CHILIZ, the fan token blockchain and platform that they're having an L1 partnership with. Chiliz is well known for having, very famous fan tokens, specifically in the sports of international football and some other like basketball, I think, as well. But this is again, like blurring those lines, making it easier and easier to actually get in. They've actually gone and allowed for also cross-chain swaps. They're actually getting access to the top 10 dexes in DeFi to allow swapping for the top 100 tokens. So very interesting idea here from BitGet. I personally don't use BitGet, but again, wallet evolution, especially with if they can find a way to integrate 4344, which is the account abstraction and the ability to help recover your wallet in the event that you forget your seed phrase, stuff like that. These are all good things I think that will help continue moving the space forward, making it easier for people to come into DeFi and frankly not realize they're using DeFi. I think that's probably the number one way to get more civilians and normies to use these products.
I think the biggest one that's been showing competition to MetaMask recently is Rabby. That's the one I'm hearing most people talk about. There's a lot of good functionality in Rabby that doesn't exist in MetaMask yet. Maybe with MetaMask snaps, there'll be more development put into it and more options there. But yeah, heard lots of good things about Rabby. I haven't moved yet, still using MetaMask, but I'm considering trying it out.
Django, you're a Rabby user, as am I.
Yeah, no, Rabby's the best. Rabby's the best wallet. There's no second best.
Oh, wow.
It's true.
Ooh.
I'm surprised Binance didn't have a wallet. I would have thought they would have had a wallet. It probably sucks. It's probably not as good as Rabby. Coinbase mobile wallet's pretty good, but who uses a mobile wallet for anything other than collecting POAPs at conferences?
Sadly, a lot of people use their mobile devices for DeFi, and that is something we absolutely do not advocate.
We got a good question from Steve there in chat. Maybe that's a good one to wrap up on. Django, if you got given $1 million, what would you do, and like how would you deploy that into crypto? Would you just insta buy Ether?
I'd probably match my same allocations I have now. I would not change my overall portfolio structure. Maybe I'd be a little bit lighter on cash if I had an extra $1 million, because I'd be able to, weather more a longer period of, because I'd be able to, make plenty off of just T-bill yields. So I would need less like emergency cash, I'd say. But yeah, no, I'd copy my exact same portfolio allocations I have now, roughly.
Gabe?
Yeah, I mean, it's a bit of a boring answer. We did break down some of our portfolio allocations and things we're looking at going into this bull market last week. But yeah, I don't think I would make a lot of changes to my portfolio either. I'm pretty happy with my allocations.
Andrew?
You guys are no fun. All in on GMX and OP.
No SNX
Why?
or DYDX?
Sure. I mean, I'd add more risk here. If I had an extra $1 million, I would I'd be playing with house money, right? So if I was just given this $1 million, I would be thinking, where can I put it to turn it into at least 10 million this cycle? So probably all altcoins. Probably all altcoins. Probably I'd pick my favorite altcoins. Maybe GMX, OP, SNX, maybe a little bit of Coinbase stock thrown in there for good measure. Maybe buy a little bit more ETH, but probably already have plenty of that, TBH. So yeah, I'd try to pick a couple more altcoins for diversification, and there we go.
I think for me,
No Solana though. No
Solana.
Solana.
That's all. I like Andrew's answer. I do think that if I just had an extra mil, I would, and that's one thing we push in our mastermind is that we stick to the plan. We create an all-weather portfolio that looks good in all market conditions. That's why it's called all weather. And like Gabe said, I think we're all pretty happy with our allocation. If anything, it would allow me to have a little bit more risk. Like Andrew said, maybe buy a couple spot coins, or just projects investments that I think are pretty cool with size. That's probably the one thing that would be different. I would probably put a big chunk in BTC ETH on the concentrated liquidity, play off that. And yeah, I mean, honestly, I think my answer would be the same as Andrew's, just going in with a little bit more size on some interesting projects that probably aren't in my main allocation, but could be interesting to pop off and continue feeding into my engine of accumulating my long coins.
And if I have any extra that I couldn't figure out, I'm gonna go take that and go play poker, Jangle.
Ooh.
Jangle, we got another question in chat from Russell here. Why do you think RSR's fully diluted value is high?
Mostly because at this point it's a governance token, and there is a way to get yield on it. But to get yield on it requires taking on risk. So it's not necessarily like free yield. So I mean, actually, it's not that high. 264 million, not that high, and it it could likely run. Maybe if I had $1 million, I'd allocate some to RSR. There's a lot of altcoins that are on my watch list that I have not aped because it's kind of been my thesis that Bitcoin and ETH will run earlier on in the bull market before alts start going absolutely crazy. But we've kind of seen the opposite happen. I mean, well, Bitcoin dominance has been increasing. ETH's been kind of lagging behind a lot of other alts. Well, not the vast majority of alts, right, have gone to zero, right? But from the alts that have survived, there's a survivor bias there. A lot of them have had a really good month against the majors, so that's very interesting for me to see. And then even today, a really good performance against the majors. So looking at it, it doesn't necessarily just because it's a governance token doesn't necessarily fit my investment thesis, but I guess you could make the argument if you were to dig into the metrics of their growth and adoption that perhaps a $240 million or 250, whatever it is, valuation is fair. At the end of the day, I don't think most allocators in altcoins are looking at things like valuations or fundamental metrics. So it's kind of a moot point, to be honest.
Yeah, and there is the additional risk vector because if there is imbalance in pools that are supposed to be stable coins, I think the initial that's initially brought back to par through the selling of RSR, right? There's a reserve pool of RSR that can be sold to bring the pool back to parity.
Great point.
Yeah, and that isn't necessarily your RSR unless you staked it in that pool, but it's still fake. It's still forced selling of RSR.
Yeah, exactly. Yeah.
All right, I think we'll wrap it up there. We had quite a few other stories in the agenda. We didn't get to them because obviously they're great discussions and bad internet. That's issues aside. They'll be in the show notes. So if you check it out on any of our replays, you'll be happy to look at that. Jangle, anything you want to talk about, please?
Like, subscribe. We got more people in the chat than we have likes, so that's a shame. Click the like button, and we'll be back here next week, 1 p.m. Check us out as well. We're relaunching our Beat the Banks group, so you can go to beatthebanks.circle.so. I'll link that in chat.
I'll give you a better link.
Yeah,
btb.beacondefi.xyz.
Okay. Head there and click that link from Chris in chat. It's giving me a not secure error from that redirect.
You'll have to clear your cache because it works in incognito. So
Okay. Well, either way, either one of those links will work. We're going to be live on Friday for webinar on there. So mark your calendars, keep an eye on your emails, and yeah, that group. And yeah, like the stream, subscribe. See you soon.
07. Have a great week, everybody.
07.
Let's get ready to beat those banks. And the bull, beacons up, banks down. See ya.